So, markets just keep grinding higher, and yeah, geopolitics is once again driving the mood. Hey everyone, it's Friday morning, April 17th, and welcome back to Capital Markets Quickie. I'm your host, Endrit Sella, here to break down yesterday's market action in just 2 minutes. Quick note before we dive in. Today's episode is brought to you by AMF Capital, Asset Management Frankfurt. Learn more about our funds and strategies at amf-capital.de. Alright, let's get started. Now let's start with the big picture. U.S. equities actually pushed to fresh record highs yesterday. The Dow Jones was up about 0.2%. The Nasdaq climbed 0.4% to a new all-time high, and the Standard & Poor's 500 also gained around 0.2%, continuing its move above that 7,000 level from the session before. So what's behind this move? Well, a big catalyst came from geopolitics. Markets turned higher after news that Israel and Lebanon agreed to a temporary 10-day ceasefire. That really lifted sentiment, especially because it ties directly into the ongoing U.S.-Iran negotiations. Now, according to experts, both sides are actually open to extending the current 2-week ceasefire, which is set to expire next week. So yeah, investors are clearly betting on de-escalation here, at least for now. On the macro side, we got a bit of mixed data. Initial jobless claims came in at 207,000, slightly better than expected, so still showing a resilient labor market. But industrial production declined by 0.5% in March, missing expectations, so some signs of slowing momentum there. Alright, now let's talk earnings, because things got interesting after the closing bell. Taiwan Semiconductor and PepsiCo both delivered strong numbers, beating expectations on both revenue and earnings. Charles Schwab also beat on earnings but missed on revenue, so a bit of a mixed picture overall. But the real story? Netflix. Shares dropped more than 9% in after-hours trading. And that's despite actually beating expectations on both revenue and earnings. Revenue came in at $12.3 billion, and earnings per share were 1.23, both above estimates. So why the sell-off? Well, the outlook disappointed. Netflix guided for earnings of 0.78 per share for the current quarter, which came in below expectations. And on top of that, founder Reed Hastings announced he's stepping down from the board after nearly 3 decades with the company. So yeah, a classic case of good numbers, but not good enough for the market. Alright, that's it for today's Capital Markets Quickie. If you found this helpful, hit subscribe and stay in the loop. And if you want more insights, just add me on LinkedIn. Always happy to connect. See you tomorrow morning.